Good day, everyone. Dan, Sharpe Trade. As many of you know, and we have mentioned previously, there is a front side of the house to Sharpe Trade LLC, which is everything that you folks see, and there's a back side of the house, the private stake of the managing partners of the firm that we trade privately. When we were forming Sharpe Trade, and it took some time to do that, but when we were forming Sharpe Trade, there were a lot of discussions that had to do with what we wanted to present on the front side of the house. One of those things was just reality, because there's so much nonsense out there, and somebody that's actually doing it needs to talk about investing and trading reality, because there is so much stupidity out there, right? Now, we all recognize all of the nonsense that's out there, and it is nonsense. As a matter of fact, for about the 500th time, no joke, I just ran across it again. Somebody claiming that they never have any trading losses of any kind ever. There's a way to greatly increase your accuracy rate as long as you realize what you're doing, because with that, you are also playing with fire when the situation changes and everything blows up on you. So you can have incredibly high accuracy rates for a long time, especially if your risk profile is inverted. But see, people have to understand what that even means. With an inverted risk profile on binary trades, you can have incredibly high accuracy rates. But eventually, that tax man is going to come around and collect. And when it does, you better understand that about the process you're using. So anyways, I just ran across this again. Somebody else claiming they are the greatest genius, they know more than everybody else, and the proof positive of that is their high accuracy rate, and they're never going to have trading losses because of how intelligent they are. Wow, because actually I've heard it's through the rumor mill. It's like through 4 different people that actually know what that guy's doing, and when his day comes, it's going to be quite spectacular because he is running an inverted risk profile on his iteration. Regardless of any of that, we understand that, right? And I can talk about that. I can talk about his risk profile. I can talk about, and that is only what I've heard. That's why I'm not using specific names. But it is nonsense. The idea that somebody's going to go through their entire trading career and never have one loss is, as we have said before, nonsensical at best. So when we were forming the firm and we said, okay, there's going to be a front side of the house, there's going to be public content for new traders so that they have something else. There's at least something else out there for people to listen to that's intelligent. Sharpe Trade's not the only one doing this, by the way. I think what Tasty Trade is doing is fantastic, quite frankly. But anyways, there has to be somebody talking reality since there is so much nonsense. You can be accidentally profitable, by the way. I want to have an entry about that. People who are accidentally profitable. Regardless, that was the first point. That was the first sort of driving focus of Sharpe Trade LLC. Is the managing partners were like, okay, we got our private stake, we're going to trade that, but we want to help out folks that are new, and we're going to run a lot of things for free. We have 3 free courses: how to begin with investing and trading, money management for investing and trading, which is basically optimal math over an iteration of trades, and then trading psychology and emotional discipline, because you have to have a strong mental game in order to trade well. So that's free. We also have, and this is what I sort of want to get to here, we also decided to run for free a Sharpe Income project, whose objective is to start from next to nothing and grow the account into something that could pay an eventual income. And when we did that, it's like, we could start this with $100,000, $500,000. But we wanted to go to the tiny account because we realize a lot of folks start off and they don't have a lot of funds to invest in trade. Now, I want you to zero in on the phraseology that I just used, because I try to use very specific terms when I speak. I attempt to. I'm not always successful. And I have some articulation errors that do creep into my speech. But what did I just say? Not a lot of money to invest and trade, right? So we're going to circle back around to that. So anyways, what we decided to do is, like, what's a small account, retail account, somebody that wants to get started? $5,000? What's a really small retail account? $2,500? So what we said is, we're going to demonstrate to people that it doesn't matter how much you have. We're going to go way beyond a really tiny account. We're going to go to $500. And we're going to demonstrate a lot of the principles live, in real time, continuously as it progresses, onto an actual account whose purpose eventually is income, right? Some sort of fixed income based off of, a lot of right now it's equity income, although that can change over time, but it's equity income based off the concepts of fixed income. Okay, and we're going to show, no, you have to come up with a rule set. You have to have some sort of coherent thought process behind what you're going to do, and here's how it's done with almost next to nothing. $500. That's what it began with. $500. At the time of this recording, it's approaching $4,000. Now, circling back around to what we just said about a minute or two ago, we said folks that don't have a lot of money to invest and trade. To invest and trade. In other words, money that can be dedicated for investing and trading, and you're not going to need for a bill in 6 months and liquidate the whole account and take it out. And I say that because we have run across, when we're trying to help folks that don't have a lot of money to invest and trade, we discover that actually they don't have any money at all to invest and trade. I'm using that, is that the infinitive verb? To, I'm using that very, very, very specifically. You can have some extra cash. That doesn't mean that you've got money to invest and trade. And here's probably where the managing partners don't really like me doing this sort of entry, but I have to do it anyways. Go to the How to Begin series. Okay? If you go to the How to Begin series and you start listening to the first 3 or 4 videos in that How to Begin with Investing and Trading, completely free course, in the videos you'll notice that I say you may have missed something. You may have missed a text entry that we actually used to begin this entire series. So I wanted to make sure people were actually doing the work rather than just listening to videos. So I said, go back and read, do the work, actually read the first entry we had. And the first entry we had is where you begin. Where you should begin with investing and trading is Dave Ramsey's Baby Steps. Okay, Dave Ramsey's Baby Steps. I'm not going to get into, there is such a thing as productive debt. I'm not debating that. I'm a firm believer that there is such a thing as, using a little bit of debt responsibly to leverage a business forward. That's not what I'm talking about. I'm talking about your household finances. Go through Dave Ramsey's Baby Steps. Get debt free. Okay? So you can have $1,000, you can have $2,000, you can have $3,000 saved up, and you don't have money to invest and trade because you have no emergency savings. You have your income, well, basically, I'm just going to be blunt and honest. If you're depending on one single paycheck, you're one step away from disaster. And a lot of people go through their lives like that. A lot of people go through not only living paycheck to paycheck, but that is like the sole source of their income. That is the only source of income they have. And they are literally, if that dries up, they're like one disaster, 2 steps away from homelessness. So what we tell people to begin, as far as home finances, which is different than business finances, and it's much, much different than sovereign nations' financial situations, what we tell people is go through Dave Ramsey's Baby Steps. Okay? Get debt free. Don't owe any debt. And part of his baby steps is not only do you not owe any debt, besides maybe the mortgage on your house, you should have 6 to 8 months worth of living expenses saved up and in the bank. And this is something Dave Ramsey tells people. How much better would you feel knowing it's like, if something happened, God forbid, income, I just have literally my burn rate. You calculate your burn rate, how much do you go through in a month? Oh my God, I have 6 to 8 months just sitting there in the bank in case something bad happens. That's a pretty good feeling. You know what I mean? Now, as I was saying before, we've run across this particular paradigm where somebody will come to Sharpe Trade, they're just following the free stuff, right? They're following along in a Sharpe income project, they're putting the principles, they're doing the work themselves. And then, I may reconnect with them a year and a half later or 2 years later, and it's like, hey, how's your income account going? Oh, I had to liquidate it. I had to liquidate it because an emergency came up. Or I had this debt that I had to pay off. And I'm just thinking, then you didn't have disposable income to invest and trade. You never had it. Even if you had $1,000, you had $1,500, you had $2,000, you never had disposable income to invest and trade. You had disposable income that should have been going in your savings or should have been going to pay off all of your debt. So this is the part I said where the managing partners may not really appreciate what I have to say here. But if you're in that situation and you got a lot of household debt and you're living paycheck to paycheck and somehow you got $1,500, don't come to Sharpe Trade. Right? That's probably the part they're not going to like, but it's the truth. You want reality because Sharpe Trade shows reality? Don't come to us. Don't start investing and trading. As a matter of fact, this is the part they're really not going to like. You may want to tune out of us for a while. You may want to tune out because what's going to happen is you're going to see, oh, look at Dan and look at this income account or look at that he talked about. Oh my God, it took off. And you're not getting your psychological game down and you get too excited. And I've seen this play out 300 times. I'm not talking about any specific individual. I really, really am not. I'm just saying I've seen it happen so many times that, oh my God, I got to invest in trade. I got to invest in trade. And what's happening is you're listening to us. You're seeing investing and trading stuff. You're seeing money and you want to jump in. Don't. Start tuning out from Sharpe Trade. Okay? Start tuning in to Dave Ramsey a bit more. Go to him. Because you're not yet to the point, if you're sort of in that whole scenario, you're not yet to the point where you should be investing and trading your money. Okay? You need to pay off your debt. You need to pay off your household debt. You need to get 6 to 8 months worth of living expenses saved up. All right? Then, after that, you got $500. Then you have $500 to invest and trade. But I'm telling you right now, I can't tell you the number of times I've talked to people, asked them later on, a year and a half later, hey, how's that going? He's like, oh, I had an emergency come up, I had to liquidate it. I'm like, where's your emergency account? Well, why didn't you go into your emergency account? Why did you have to do that? Oh, well, I should have done that. But listen, when we began all of these products, we specifically thought about people that don't have a lot of money because we don't look down on anybody because of the amount of money they have. We don't. And I really want to emphasize the point that we don't look down on anyone because of wherever they're at on the socio-economic ladder or even perceived to be on the socio-economic ladder. Because I have also, throughout the 21 years that I've been doing this, discovered those people that can show you an account and there is an actual $6.8 million there. There's a problem with that scenario. I am also an investor. So one of the things an investor cares about is what the balance sheet looks like. So it's all well and good, and I can tell you I know of one specific incident that matches this to a T. Yes, they had an account and there is $6.8 million in it. Unfortunately, they are wildly more poor than probably the people watching this video because they had $12.9 million in liabilities. Do the math. They're in the hole. While simultaneously they were walking around looking down their noses at everyone else because they had this perception of themselves that they were so wealthy when, case in point, they were not only broke but deep in the hole and basically robbing Peter to pay Paul for years and years on end trying to keep their little self-delusion alive. So we say this to reiterate the point that no, we don't look down on anyone with whatever you have to begin investing and trading. Your wealth is relative. You can have $835,000 in net worth and you think you're flying high and you are more wealthy than most people on this planet. But you start talking in the investing trading circles and you realize you're a really, 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 really small fish. It's not a lot of money. It's really not. And there are guys, they have $30 million and they talk to a lot of different people in net worth and they realize, guess what? In the whole scheme of things, there are people a lot bigger than them. And they're a small fish in that pool. So all we're saying is, listen, we don't look down on you. When we formed Sharpe Trade LLC, specifically we formed it with the thought process of people that don't have a lot of money to invest in trade. But it is money dedicated to investing and trading, which means you should have gone through step one, what we said, Tune into Dave Ramsey if you're not there yet. Pay off all of your household debt other than maybe your mortgage, and that's something Dave Ramsey says. Pay off all of your household debt. Have 6 to 8 months worth of living expenses saved up so that you're not 2 weeks away from homelessness. And then, you can start to look at investing and trading, and we'll be here. Okay? But don't get so excited that you're watching what we're doing that you're putting the cart before the horse. All right? So, for now, that's just been our thoughts. Hey, if you've enjoyed this video, don't forget, go ahead and hit that punch that like button. We definitely appreciate it. If you're not yet subscribed, go ahead and hit the subscribe channel or subscribe button, I should say, on the YouTube channel, and we appreciate it. You can check us out on Facebook, Google+, Twitter. We're all over the place. And as always, that has been what it's always been. It's simply been our thoughts, not yours. For whatever the heck day it is, as always, stay safe, trade well, and remember that love doesn't cost a dime.